Well, this one is definitely one where it's really helpful to know that it's out here, because as realtors, you're the first line and you're having those deeper conversations with clients before they ever even come to see us. So sharing this one with you, I hope really opens up some ideas or maybe even some past clients that you've met with. That this might work really well for. So, Jared mentioned I have a passion for helping others, and this is one that kind of speaks to this passion because it's a program that was created to really help families. So let's just jump right into it. Let's talk about the purpose of the Family Opportunity Program. This is specific to elder parents and disabled children. So the purpose of this home opportunity program is to open the door to home ownership for families who want to care for the people they love when traditional lending rules would like normally close that door. This program offered with conventional financing is designed for situations where an elderly parent or a disabled adult child cannot qualify for a mortgage on their own, but a family member is willing and able to help by purchasing the home on their behalf. And what makes this program powerful and often overlooked is that it allows that family member to buy the home as if it were owner occupied, even though they won't be living there themselves. That means better financing terms, lower interest rate, and lower down payment options compared to like an investment property or second home, which is a lot of the times where people will default to because that's what's more common. They're just not aware that this is available, or maybe their lender doesn't offer it. So I want to kind of show you an example. Like this is a real life example of a client I've worked with. So this past client called me wanting to purchase what she believed would need to be an investment property. She asked about the down payment requirements, and as we walked through like all those requirements, she became like discouraged. And because of course it's going to require a bigger down payment, and in addition to that larger down payment that she wasn't expecting, it also requires like additional reserves that she just didn't have available. So then she asked if she could instead purchase it as a second home. And I explained that the down payment would typically be lower, but because that property would be located close to her current home, it likely would not meet the requirements for a second home unless there was a clear reason it was being used as a vacation or weekend property. So rather than stopping there, I was like, hey, like, what are you doing? Why are you purchasing this home? Like, what's the purpose? And that's where she kind of broke down and she shared the real reason. So she wanted to buy a home for her disabled son. His disability made it difficult for him to maintain stable employment and then qualify on his own. But he absolutely had the ability to live independently and take care of himself. And she wanted him to have that dignity and freedom of living on his own while still being close enough to support when that was needed. So I got like all super excited. That was when kind of like that family opportunity program became a perfect fit. So through Fannie Mae, it provides her the option to purchase the home on behalf of her son using owner-occupied financing and the lower primary residence down payment requirements. So what started out as a conversation about investment property turned into a path towards like independence, stability, and a solution that really truly fit like that family's needs. And as you can imagine, just kind of like boosting that confidence for that disabled son. And so that's why this program really, really matters. And as a lot of you know, though, occupancy is the number one thing investigated by the FBI because the fraud is so rampant. And so I want to kind of go through different things about this just so that you can help identify the right clients. So let's talk first about that occupancy. So this is where the home opportunity program really breaks away from what most agents are used to hearing about occupancy. Under this program, the occupant of the home must be either an elderly parent or a disabled child. So that's who it is designed for. So keep that in mind. Someone who is just unable to qualify for a mortgage on their own. And that person will live in the home as their primary residence. Now, the borrower, the person qualifying for and signing on the loan, does not need to live in the home. This is the key distinction. A son, a daughter, or other qualifying member can purchase the property on behalf of their loved one while living elsewhere. So they can live in a completely different state, or they can live right next door. And there's no requirements. So even though the borrower is not occupying the property, Fannie Mae still allows this loan to be treated as owner occupied, not as a second home and not as an investment property. And this matters because it preserves that owner occupied benefit. So lower interest rates, reduced down payment requirements, and more flexible underwriting while still meeting the real life need of housing for that family member. So from a realtor's perspective, this can be a really powerful conversation to have when a family assumes they're limited to cash, co-signing, or investor terms. So really, I encourage you to kind of dig through your pipeline. In reality, this program, it creates a compliant, and you guys know, if you worked with me, I'm all about compliance. And this program allows that compliancy and an affordable path that aligns with how families actually live and care for one another. So like, this is probably what I would have done for my mom instead of doing a reverse mortgage. And if you didn't sit in on the reverse mortgage class that Jared did just recently, like I strongly encourage you to listen to that one because that kind of is another really, really great program that not a lot of people know about and understand. So, okay, property types. This is like super cool. So another reason the Home Opportunity Program is so effective is that it doesn't limit families to just one type of property. In fact, it gives them a wide range of options depending upon their goals, their budget, and their long-term plans. So under this program, a family member can purchase a single family home, a condo, or a small multi-unit property on behalf of their loved ones. So yes, that does mean 2 to 4 family homes um, that you can purchase. And what that does is it allows you to then help finance because it becomes an expense, right? And being able to rent out those other units might help offset that expense that you're taking on for that family member. So the key requirement is that, and you're going to hear me say it over and over again, is that the elderly parent or disabled child occupies one of the units as their primary residence and is unable to purchase it on their own. The remaining units, if it's a multi-unit property, can be rented out. So again, like it really becomes a way to really improve the overall affordability on taking on this expense for that family member. Let me look at my notes here, see if there's anything else I wanted to talk about on this one. All right, so for realtors, this opens up a much broader set of listings and conversations as you can imagine. You're not just showing homes, you're helping families think about like creative solutions that meets today's needs while still making it financially make sense. So really awesome. Okay, so let's drill down on this down payment. So one of the biggest advantages of the Home Opportunity Program is, it shows up right here, is in the down payment. So because Fannie Mae allows this loan to be treated as owner occupied, the minimum down payment can be as low as 5%. So keep in mind on if it were an investment property, single family, the minimum down payment is 15%. Although it gets really expensive if you're doing just the 15%. On a 2 to 4 family property, it's 25%. So the idea in purchasing this for that family member really opens up that door to affordability and allowing this to work for them. So the difference can easily mean out of your own pocket tens and thousands of dollars in additional cash. Because remember, not only do you have to have the larger down payment, you also have to have the reserves. So this is why correctly identifying and documenting occupancy is so important. When the Home Opportunity Program applies, families can preserve cash, improve the affordability, and still provide stable housing for that loved one without being forced into higher cost financing that doesn't reflect the true intent of the purchase. And that's the key there. It's the true, like truly what they're trying to do. So for realtors, this gives you a strong, tangible talking point. You're not just explaining a guideline, you're showing clients how understanding the right program can change what's possible for them. All right, now documentation. So like any conventional loan, the Home Opportunity Program does require standard documentation, income, assets, credit for the person who is qualifying. And so any and all typical items that we're used to. Where this program goes a step further is around the occupancy and intent. And this is where early communication really matters. Underwriting will require a signed written statement from the borrower certifying that the property is being purchased for an elderly parent or a disabled adult child to occupy as their primary residence. That statement must also explain why that family member is unable to purchase the home on their own. In addition to that written statement, underwriting might ask for supporting documents that reasonably support that explanation. This doesn't need to be invasive, but it does need to make sense. A common example might be tax returns or income documentation showing that that occupying family member does not have sufficient qualifying income to purchase independently. The goal here isn't to create hurdles, is to confirm that the program is being used as intended. When the documentation aligns with the story, these loans move forward very smoothly. So from a realtor standpoint, the biggest takeaway is this. The earlier we identify this as a home opportunity scenario, the easier it is to guide the family on documentation and avoid surprises before we're under contract. All right, so it's just as important to talk about what this program is and what it is not. First, the Home Opportunity Program is not an investment strategy. Even though multi-unit properties are allowed, the intent of the program is housing a loved one, not acquiring rental income for profit. Any rental income is secondary and supportive, not the primary purpose. Second, this is not a workaround for buying an investment property under owner-occupied terms. The occupying family member must genuinely live in the property as their primary residence. This is not a rent to a relative on paper situation. Third, it is not a vacation home or a second home option. The property must be intended as a full-time residence for the elderly parent or disabled adult child. And finally, this is not a co-signing arrangement, which is really cool. The borrower is fully qualifying for the loan and is the true purchaser of the property. The occupant is not required to qualify for the mortgage, but they must meet the program's occupancy criteria. So when this program is used correctly, it's incredibly powerful. When it's misunderstood, it can cause delays or denials. That's why having the conversation early before like even writing an offer is key. So really, really an amazing program, but I think we can all see how this could be abused. And so we want to be really careful in the way that this program is used, and it's only used for those who truly need it. And so let's kind of just do a quick recap. This one, it doesn't take long to go over this loan program, and it's pretty straightforward, but just kind of recap a couple of things. The Home Opportunity Program is really about matching those lender guidelines with real life families that don't always fit neatly into traditional borrower boxes, but that doesn't mean home ownership should be taken off the table. This program allows a family member to purchase a home on behalf of an elderly parent or disabled adult child when that loved one cannot qualify on their own. The occupant lives in the home as their primary residence, while the borrower does not need to occupy the property at all. The biggest takeaway is this. If you're working with a family who wants to help care for a loved one and the financing feels unclear, that's not a reason to stop. It's a reason to have a conversation. Please give myself or Jared a call and we can kind of talk through it, through any hurdles, any questions that a borrower might have. So really, we're ready for questions. So I'm hoping you guys have a plethora of questions. I'm not sure we kind of went over that. If you haven't been on one of our classes before, just jump into the Q&A section, throw in your question, and we'll definitely answer that. So as you kind of think about those questions, if you haven't pushed any in there already, I do want to show you what's coming up next. So on May 4th here, the conventional basics. So even if you've been doing this for a long time, we have kind of condensed these down. We're going to talk about like conventional appraisals, like some of the most common questions about like appraisals and just the basics and how you can use this program and hopefully give you some material that you can use for marketing purposes, like Jared mentioned. So with that, Jared, what kind of questions have come through, if any?
Sweet. We do have a few. Let me bring it over here real quick. Okay. So first question, and I think, and if I don't illustrate this question correctly, please feel free to throw it back in here. But I believe they're asking, is this for in-state only, meaning is it state specific? Like some states it works, some states it doesn't.
Yeah, that is a really great question, and super happy to say no. It is all over the state. So if someone has a parent in another state, you could definitely do this, or a disabled child. So either way, you don't have to live in the same state where the loan is being originated.
Okay. Would new construction be an option?
For sure, there's no restriction on whether someone could buy that or finance it, I should say, finance this using new construction terms.
All right. Can you use FHA, VA, or USDA with this program?
No, this one is strictly conventional, so you wouldn't be able to use any government programs with it.
So last question that we have right now is, can this be used to help a child qualify who does not have a credit score or is new to the workforce?
Only, okay, so that's a really good question, and I'm glad it was asked just to kind of make that distinction. If that child is disabled and can't qualify on their own, yes. But it's not just meant for kiddos just like new to the workforce. It is a disability. So it's very specific that it has to be a disabled child or an elderly parent.
Okay,
Ooh,
I think that's that answers, and I think that's all the questions. So nice to end a little bit earlier than the 30 minutes. We're not here to take up more time. So if you guys do have questions that linger after the fact, please just email us, like that's easy too, or pick up the phone, give us a call, text us, whatever's easiest. Um, but yeah, we look forward to future classes with you guys and hope you have an awesome week. Thanks.
Bye, everyone.